The Nasdaq-100 is my favorite index in all of investing. And for good reason. It has obliterated the returns of the S&P 500 in its 40-year history. And we'll touch more on that in this video, but the real purpose here is to find the best ETFs to get exposure to that winning index. I've recently made a big move in my Roth IRA from QQQM over to JEPQ. And this left a lot of you out there scratching your heads because of some previous comments that I had made about the two ETFs. What gives? Is QQQM better or not? And what about the OG QQQ? We'll cover everything you need to know about these ETFs in this one. If you're new to the channel, welcome. My name is Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please tackle that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind as you watch the video. We had 3 new channel members this week. It was a big one. A huge thank you to Jeff, great name, Jazz, and Tim. I appreciate you joining the channel membership and making this possible for me. And of course, as always, I appreciate all of you that have been here all along. And still no sponsors, as always, but if you've been surfing for a good deal on Seeking Alpha Premium, be sure to hit up my link in the description below. Save yourself some money and support the channel. And now, you know what time it is. Let's grow. The Nasdaq-100 Index. The ETFs that we cover in this video will all have the same underlying index, so let's start there. The Nasdaq-100 Index has been around for nearly 40 years. It was started back in 1985. It has a simple methodology that is comparable to that of the S&P 500. The Nasdaq-100 takes 100 of the largest companies by market capitalization that are trading on the Nasdaq Stock Exchange. The index excludes the financial sector, and it runs a bit tech-heavy compared to the S&P 500. It has an 18% higher tech weighting as I write this script. And if y'all know how I'm wired, I think that is a good thing long-term. And before we get into all this, it's important to know that the Nasdaq-100 is more volatile than the S&P 500 or dividend or value indices. If you choose to invest in the ETFs that we'll discuss today, and I highly recommend it, be sure to never panic sell when things get dire. Be a buyer and stick to your target allocations in all markets. And now for the fun part. I wasn't joking when I said this thing dominates the S&P 500, like big time. Let's check it out. You may recognize this spreadsheet from a video I made earlier this year, and I will be updating this spreadsheet once per year with a new video to show how the 2 best indices, in my opinion, compare to one another over time. So I won't belabor it in this one, since this is more about the ETFs themselves. But you can see here in this scenario, it starts in 1986, which is the first full year the Nasdaq was out. So I just started with the first clean year. And we have the Nasdaq returns here with this purple and the S&P 500 with this blue section. And then difference is from the perspective of the Nasdaq. So a negative number means the S&P 500 is ahead, and a positive number means the Nasdaq is ahead. So this person's putting in $6,000 a year. It's equivalent to $500 per month, and we start with $10,000. And again, we're going to be pretty quick here because we got to move on. In the first couple of years, the S&P 500 was outperforming the Nasdaq in this scenario. The year in balance after the 5th year was 50K compared to the Nasdaq's 43K with these variables. But then as we scooch down, you'll notice the Nasdaq takes off. And remember, pre-.com, it really dominated. That's when everyone thought if you put .com, you're worth billions. That's all you had to do. You didn't have to have a real business. But then it came to a screeching halt. But even after the great technology bubble, it was still ahead overall. And then it continues to build, it goes up and down. It's more of a roller coaster. But when we get down to the end of 2023, I only update this once a year and I wait till we have a full year. With this scenario, the Nasdaq's final value is 7.6 million to the S&P 500's 2.9 million in that same period of time. So the Nasdaq does have a $4.75 million lead with a very realistic, over a long stretch of time, dollar cost in strategy. So this is just a sneak peek that it's not fluky. This thing is just flat out good, and it always has been. The main way to invest in the Nasdaq-100 has been through the ETF QQQ, commonly referred to as the Qs. Let me show you just how well it's performed compared to the market, the S&P 500, and the other growth ETF competition. And no cherry picking here. Give me the good, give me the bad, and give me the ugly. I'm talking .com ugly. We're out here in Seeking Alpha on the charting tab here for total returns, and I zoomed it out 10 years. We want to look at as much data as possible, and we're going to zoom it out even more. Let me explain what I'm doing here. I have QQQ, which is what we're comparing to everything, the Nasdaq-100, and then what I did was I picked two popular and old technology funds, that's VGT and XLK, and I'm grabbing both of them for a reason. We'll get to that. And then SCHG, a very solid growth ETF that's a favorite of many investors, along with VUG. I picked these because they're roughly the same mix as QQQ from a sector perspective. Not perfectly, but these are like half technology-ish funds, so they're pretty good like competition. And then I have SPY instead of VU for the market, because again, we're going to look back as far as possible. So on the 10-year, where we're starting, you can see that the technology funds, VGT is number 1 at 566%, XLK is number 2 at 545. So small and mid tech have outperformed large tech a little bit in that time frame. And I say that because this is sort of like VU and VTI, and that XLK is the big tech only, so it's the VU, and VGT is those same big tech companies, but it also has mid and small tech. It's over 300 holdings compared to around 70 of XLK. And then QQQ, very solid. It's number 1 by far and away on the multi-sector growth over the last 10 years at 450%. HG, an amazing ETF, is right there at 379. VUG at 343. And the market is at 244. So all these growth funds have smashed the market SPY in the last 10 years. Okay, so I now have a date range of SCHG's inception date of 12/7/09. And that's because SCHG is the newest one. So we can see how all of these growth funds have performed since SCHG has been around, including SCHG, of course. And we're here in December in 2024. So this is 15 solid years of data, almost exactly, actually. And again, we have VGT has been the best ETF, and it's my favorite. I've been invested in it for a long, long time at 1,319%. QQQ closed the gap. It's at 1,275%, and it's ahead of XLK, the big tech market, at 1,226%. And then SCHG has been solid, but not nearly as good at 941% over the last 15 years. VUG is right there, but lagging a bit at 855. And you can see all of our growth are beating the market, which is at 618. So that's looking good, but we haven't got to the .com yet. We're now going to say goodbye to SCHG, and we're going to go to the next youngest. Okay, our next born baby here was actually VGT and VUG, and they've been around since 1/26/2004. So we have almost 21 years of data here. This is a big period of time, still before the .com, but let's see what's happened in over 20 years. QQQ is number 1 at 1,552%. VGT is number 2 at 1,477%. XLK is trailing VGT by nearly 100%. VUG is way down there at 966%. And again, all the growth in the last 21 years are outperforming SPY fairly easily, and it's at 688. But you can see it rose to the top. This is a great index. There's nothing fluky about it. But now for the final test. All right, QQQ is now the youngest. So we have since 3/29/1999. That is pre-.com bubble. And with the .com crash included, wowzer, QQQ is up 1,044% to XLK's 757%. And the market, albeit more stable, as you can see down here during that crash, but with everything added in there, is at 637. So all the growths have won, but really to my ultimate point, I love VGT, right? We saw that it was a little ahead of, but close to XLK all along. So if it existed back before the dot-com crash, QQQ would be comfortably ahead of VGT, not only in the last time frame we looked at since VGT's inception, but even looking back before that. This thing is a roller coaster, but it's pretty good and fairly resilient. Invesco created the ETF QQQM in 2020. And it invests in the Nasdaq-100 just like QQQ does. The only difference is that it comes with a lower expense ratio of 15 basis points compared to the 20 basis points of the Qs. If you're a buy and hold investor that's accumulating wealth, you'll want to go with QQQM. But if you play the options market, QQQ has higher volume and better spreads. QQQM is the better choice for me as a buy and hold investor. This will be the case for most of you watching this video as well. With all that said, what about that other new kid? QQQM versus JEPQ. Both ETFs use the same underlying index, the Nasdaq-100, but they are not identical because of the equity-linked notes that JEPQ adds to the mix. Let's check out the fund overlap of both of these growth ETFs. I know it feels weird to call JEPQ a growth ETF because it's a little bit of a hybrid that raises its floor, but it's a growth ETF. Let me show you. I threw together this quick spreadsheet to compare JEPQ and QQQM, and on the holdings breakdown here, I have the top 10 holdings up in this section, and then a breakdown by sector in this one. And you can see that the two ETFs, JEPQ and QQQM, have a 67% weighted overlap, so they are 2/3 identical. And you look holding for holding, they have the same names in the top 10, perhaps a slightly different order, as you can see here, but when you just go down both of them, you can see that you're talking about the same holdings. And you might be thinking, what the heck is NDX16? And that's an option. That's an equity linked note, most likely. And there's a whole bunch of these in the holdings of JEPQ. And that's why they hold less of each holding. You probably notice QQQM has a little more Apple, a little more Nvidia, a little more Microsoft. And it's the same concept down the line, roughly proportionally the same. And that's because JEPQ will hold things from the Nasdaq-100. It is a legitimate growth ETF. And most people look at it as like just a dividend ETF or value. It is not. Its PE ratio is high. It has nothing but growth companies, but it has a dual purpose of producing income with options on these growth holdings. That's what I like about it. You get amazing price returns over a long period of time, and you also get that guaranteed income at the expense of a little bit of the unrealized gains, if we're being honest. But they both have 100 holdings. Again, the top 10% is a little higher for QQQM for obvious reasons. And you can see by sector, they are effectively the same as far as the percentage of each sector. They're very, very close. So the real difference between these two ETFs is simply all these options, these equity linked notes that JEPQ uses for that guaranteed income. Enough stalling. Which one is better and why? QQQM is the clear winner for buy and hold investors that have at least a decade left before they retire. The basic logic is that investments go up over very long periods of time. They may be all over the map in the short run, but when we zoom out multiple decades, we will always smile. QQQM rides the amazing index and chills. JEPQ uses that same index, but it caps its growth ceiling to create more income along the way with call options. When the market goes up, which it usually does, QQQM benefits from all those juicy gains. JEPQ gives up some of those unrealized gains because it is designed for floor protection. When the market drops, JEPQ will retain more value because of the cash flow from those call options. Let me show you what I mean here. I've pulled up QQQM and JEPQ on the charting tab here. It's total returns. And unfortunately, we don't have a ton of data here because JEPQ only has data since 5/4/2022, so 2.5 years worth. And you'll notice that QQQM is up by 20% more than JEPQ since JEPQ's inception. And I actually just took the time to edit this. I added the market in here just for context. So the market and JEPQ are even since inception. It's actually ironically December 18th today, and QQQM was down 3.6%. VU was down 2.94%, and JEPQ is only down 1.98%. So this will actually update tomorrow favorably for JEPQ, but still, that's just making the point that it has a better floor, but we haven't seen a lot of floors because in 2.5 years, the index is up over 71%. So we're going to have to cherry pick to make any constructive points here. First, let's see where QQQM shines. And I'm looking at the data here. I'm doing this live with you guys. We're gonna go from 5/1 to 7/10. Okay, so again, we're cherry picking. This is not a lot of data, but from 5/1/2024 to 7/10, we saw the market go up quite a bit, and we got nearly 20% in QQQM in just that little tiny stretch of time, whereas JEPQ was up a mere 11.09%. So that shows that when the market goes up, and I know this is just a little tiny slice, I can't wait to show more about this as time goes on. But I want to look at the floor concept. So again, I zoom back out to JEPQ's inception here. We're back where we started. So I cherry picked a little data from 8/16/2022 to 10/14/2022. And I just looked at a little downturn. There's not many of them, but you can see here, QQQM is down 21% to JEPQ's 16.7%. So nearly 5% more. And that's just in a couple months. And I know that doesn't seem like much. I actually tried another one and it was down about 4% more, QQQM. But the point is, if we have a real downturn, we will see a real difference. Like this will maybe stay around the market. You know, time will tell on that one. But the QQQM, the index itself, will be crushed because it doesn't have that guaranteed options income, just like it goes up more because it doesn't have that guaranteed option income holding it back. There's not a lot yet to show the situations where JEPQ is better, but I have a feeling we will see that in the future. Okay, stop glaring at me. It's time to get into my recent selling of about $100,000 worth of QQQM. Why I sold my QQQM. I recently made a Roth conversion, my first one ever, of about $100,000. And I sold the QQQM that I transferred over in favor of mostly JEPQ and a little slice of SCHD. It was a simple act of wanting to stabilize my floor as we get closer to retirement. My wife and I are a wishful 5 years, but probably more realistically 7 years away. I used to have a fairly small slice of my growth section in the portfolio as QQQM, and I exchanged that specific slice in favor of JEPQ. Everything else remains the same in my modern 3-fund portfolio. I still roll with 1/3 of SCHD, which I've been constantly working on building over the last couple of years because of the underperformance versus the market and growth, and 1/3 of VU, the market. And then I still have my same 1/3 of my growth section that is primarily VGT, and now it adds JEPQ to the mix instead of QQQM. And yes, I'm still riding with my 500 shares of VGT. I'm chilling out a little bit, but I'm not that tame yet. As everyone knows that's watched this channel, I don't make market predictions. I never do. I think they're worthless. And this is coming from a financial analyst that used to build forecasts and budgets for a living. But I do think the market is a little hot right now, just in general, pretty high valuations, PE ratios and everything. So I like JEPQ a little better for my purposes rolling into 2025, just to protect that floor a little bit with the passive income. Plus it gives me, someone without extra income these days after quitting my job to start this channel, some cash flow to balance out my target allocations. But the last thing to be crystal clear, if I still had over a decade until retirement, I would absolutely still roll with QQQM for that subsection, and I would let it compound. Even if the market crashed, wouldn't bat an eye. I just know that I'm going to need this cash flow in less than a decade. As a person with zero pension and that won't have Social Security for many, many years, I think you'll do great with any of these Nasdaq-100 based ETFs. Figure out what you need for your particular situation and get this thing rolling. Check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated, freedom is not. Thanks for watching, and I will see you here in the next one. Peace!